Hey there! Today we're diving into the exciting world of bull markets. You might be wondering, what exactly is a bull market? Well, picture a bull charging ahead with its horns up, things are looking up, prices are rising, and everyone's feeling optimistic about the future. In a bull market, the economy is generally strong and investor confidence is high, leading to a steady increase in stock prices. Sounds like a dream, right? But like everything in life, there are pros and cons. First, the pros. A bull market is a great time to see your investments grow. Stocks tend to rise in value, meaning your portfolio could gain some serious traction. It's also a period where you might feel more confident about taking on a bit more risk, as the market's momentum can boost even some of the riskier assets. But hold your horses, there are cons too. One of the biggest risks in a bull market is overconfidence. When prices keep climbing, it's easy to get swept up in the excitement and forget that what goes up can come down. Another downside is that as prices rise, stocks can become overvalued. Paying too much for a stock today could mean lower returns down the road if the market corrects itself. So, while bull markets can be thrilling, it's essential to stay grounded, do your research, and avoid getting caught up in the hype. Remember, the market is a wild ride. Enjoy the ups, but always be prepared for the downs.